WisdomTree, an asset manager with over 76 billion assets under management, recently adding Bitcoin futures exposure to its commodities-focused managed futures strategy ETF. The move comes a month after the SEC rejected WisdomTree's application for a spot Bitcoin ETF, though the company has since refiled. Joining us now to discuss is Jeremy Schwartz, Global Chief Investment Officer at WisdomTree Asset Management. Hello there, Jeremy. Thanks for joining us. So tell us about this plan to increase Bitcoin futures exposure at WisdomTree.
Yeah, so WisdomTree was quietly one of the first firms, actually the first firm, to be able to add Bitcoin futures to another commodity-oriented fund. Before the 100% Bitcoin futures funds were launched, we have a broad-based commodity fund, GCC, that added about a 3% position to Bitcoin futures. And it really tells it where do we think it makes sense to include Bitcoin futures is in commodity-oriented strategies. You had a little bit of conversation on gold versus Bitcoin, and that's exactly how we funded the Bitcoin futures position. Was we took a 3% position in gold and moved that into the Bitcoin futures in that broad-based commodity fund. Now we've extended that with WTMF, the managed futures fund, where we are using a quantitative signal. It's not a long-only fund. The fund in other places can be long-short. In Bitcoin futures, we're going to be long-flat because of the volatility. We don't want to go short the futures at this point in time. But our starting allocation in January is 1.5%. We can go up to 5%. And the whole point is to have broad-based returns in rising or falling markets, not directly correlated to equities. And we think Bitcoin's characteristics can do that, particularly with this long flat methodology based on long-term trends. You showed the 50, 200-day moving averages. We're looking at similar types of, but sort of more, I'd say more proprietary versions of looking at momentum trends to determine if we're going to be long or flat. And we do have a 1.5% position as that diversifying asset for managed futures.
It's interesting you say that because I do see the stock markets, equities, oil are falling, whereas gold is going up. But Bitcoin is following the stock market as well as the commodities. So why is that?
There's the day-to-day market moves, and then you zoom out over the longer term. So like right now on a day-to-day basis, gold is one of the defensive assets. When stocks come under pressure, what does well? Gold is one of those assets that does particularly well when the stock market is under pressure. So I think that's not surprising there. What's come on within equities, some of the big rotation has been the mega growth stocks, the most expensive stocks, which tend to not have cash flows. There's sort of the unprofitable tech basket has come under a lot of pressure. Bitcoin sometimes gets lumped in as sort of the new technology, the new innovation, and it shares this feature of the gold characteristics. So it's the new generation's gold, digital gold, but it also has a technology element to it. And so in the sense of that tech stocks or mega tech stocks are coming under pressure, it's sharing that right now. But we do think there's rising long-term demand for it. It does serve this longer-term store of value asset. And over time, we do think the demand will come. And that's sort of one of the reasons why now we're going to be following the trends to go long or flat in that managed futures fund. But we do think it is a useful additional allocation.
With concerns around the Fed being more hawkish with rate hikes, tapering, what impact do you think that will have on Bitcoin through 2022?
Yeah, and if you pushed us, we're probably even more hawkish than the market on the Fed. So we do see inflation as a big concern, and we think the Fed has to hike. The market is quickly going from 3 to 4 hikes. After the Fed meeting, they're now talking about tapering. Well, the Fed minutes being released, they're talking about not just slowing the bond purchases, but actually reducing the balance sheet. We've been out there with our calls, and my mentor, Wharton Professor Jeremy Siegel, is out there with his calls for a very aggressive Fed hike going into the end of the year. But I think that in some ways, when you see growth selling off, that could impact and translate to Bitcoin. And you would expect as Bitcoin gets wider use, it to have more correlations with other markets. It's not a real surprise. So if what's played out in the first week plays out, that would create pressure. But we do think the long-term demand for this type of hedge asset and sort of diversifying asset is attractive. And so we generally think Bitcoin futures have a good potential, but for this managed future fund, it will be out of Bitcoin futures if the trends turn against it. It is a quantitative signal based model there.
Just want to pivot to the SEC. They recently denied VanEck's application for a spot Bitcoin ETF. They delayed NYDIG's spot ETF filing, and WisdomTree's application was also shut down. What was their reasoning?
You know, it's always interesting to figure out what are the regulators worried about and can you address their concerns. You know, we as a global product provider, we have European products with spot products in Europe. You know, so we've, as you mentioned, institutional firm have done the due diligence on the custodians. And we have multiple custodians we can work with in Europe. We think we could have good custodians in the U.S. So we are refiling and we're working hard with the regulators. We do think the market is there for a 100% product. We do prefer a spot product, not the futures product. You know, for the 3%, we have 1.5% of the managed futures fund. We're happy with the futures. We think they serve their purpose. We're not investing in Bitcoin directly. There's just the futures. But for a 100% strategy, we do think you want spot. And, you know, we're going to be working with the regulators to get them more comfortable with the applications.